Hey everyone, welcome back to Explain the Charts. Today is May 21st, 2025, and we're going to be taking a look at the SPY, or S&P 500, and analyzing it with a combination of recent news and technical chart analysis. Recent news indicates the S&P 500 snapped a six-day winning streak amidst worries about trade developments and rising Treasury yields. We're also seeing a potential chip feud between the US and China, and Target lowered its guidance, so let's analyze these and see what the charts say. We will start with the daily chart to get a broad overview. Alright, looking at the SPY daily chart, we can see a clear uptrend from around January 2024, with the price steadily rising. However, we see a sharp decline starting around April 2025, followed by a period of volatility and recovery. Most recently, we saw the S&P trading at $531.36 on May 21st, 2025. The pullback we're seeing aligns with the recent news of the S&P 500 snapping a six-day win streak. Growing warnings that relief over trade developments could be short-lived are likely contributing to this. Now, let's zoom in on the more recent price action to see what we can find. Zooming in, we see a consolidation around the 590 to 595 range, with recent candles showing indecision. The US-China chip feud could be a factor here, creating uncertainty in the market, Nvidia being at the center of it, creating uncertain trading environments. To get a better sense of the short-term trends, let's switch to the 1-hour chart. On the 1-hour chart, we can see more clearly the recent volatility, with the price bouncing between support around 587 and resistance around 595. The hourly candles show choppy price action, reflecting the mixed signals from the news. Let's narrow down to the candles from May 20th to get a clear picture of today's trading. Looking at the 15-minute chart helps us get a more granular look at the price action. We can see some intraday bounces, but there is also consolidation and low volatility, and a slight overall downward trend that matches the daily chart. So, what are the key levels to watch? On the upside, a break above 595 could signal a move towards 600. On the downside, a break below 587 could lead to further declines. Given the current news environment with the US-China chip feud and Target's guidance, I'd lean slightly bearish in the short term. However, the market's overall uptrend suggests that any pullbacks could be buying opportunities. Keep an eye on Treasury yields. As Reuters reported, rising US Treasury yields are putting pressure on stocks. If yields continue to climb, it will add downside pressure. Also, watch the developments between the US and China. Any signs of de-escalation could provide a boost to the market. UBS advises investors to remain invested despite uncertainty. So as always, manage your risk accordingly, keep stop losses in place, and good luck trading. This is not financial advice.